Hey everybody, welcome back to our markets and sectors class. My name is Mike Fairborn, Senior Manager Trading and Derivatives at Charles Schwab. Hey, today folks, I wanted to look at three example trades that we can look at during our discussion that we'll be putting on. Given the conditions within the market, there's a lot to talk about here, of course, and sectors, and not to mention elevated VIX type conditions. So I'll look forward to going through that with you. Good to see some of the names recognized quite well. Wiley, hello to you, as well as Scott. We've got Jay Richardson, Kevin Baker, Michael, and others here. We've got Zink, Will. How's it going, Will? As well as Mighty and Greg and others, folks. Any questions, comments you have, throw those in the chat box so we can address those for you. I'm joined in the chat by a good friend of mine and colleague, of course. That's why he's here. He's a colleague as well, Cameron May. You can follow him on X, Cameron May CS. Post some great content there. Follow me on X, Mike Fairborn CS as well. All right, everybody. On that note, let's get the show rolling. So let's hit some disclosure items. All right. First off, information provided here is for general information purposes only. Now, Schwab does not recommend the use of technical analysis as a sole means of investment research. The paper money software application is for educational purposes only as well. Investing involves risk, including for some products more than your initial investment. Now, a quick look at the futures options disclosures. We do not trade futures in this class, but we do reference them. Of course, we do want to take a good solid look at crude today and see what companies might be positioned possibly to benefit if we stay at higher levels, elevated levels. With that we'll hit that in a moment, but that's one reason why we do have those futures disclosures there, just to look at the charts, because we don't trade them. Futures and futures options trading does involve substantial risk, not suitable for all investors. And finally, past performance is no guarantee of future results. I did want to take a look at the Stacks Index too, if it has been posted. It wasn't earlier this week, but I want to just take a quick check and just see if we did get that data as well. And just as a quick note there, historical data should not be used alone when making investment decisions, and the Stacks is not a tradable index. Okay, well, here we are looking at our markets. We did bounce back a little bit today, which all else, well, thus far, the markets aren't closed. But all else equal, that is a positive thing. We had been trading down below. You can see the RTY down here. Everything's real close to about, 0.8% down. With the RTY being the exception, it's about 1% higher, about 1.8 and change higher. So the small caps are taking a hit. We'll go ahead and go through some of those here in just a second. But there you go. Really bouncing off our lower levels today. Now, all else equal, that can be construed as a positive if we can hold there, because the market is actually rejecting. That's one way to look at a hammer pattern, right? You get that sharp rejection off the bottom. You're getting it basically opening up or closing, perhaps. We'll have to see where it does close. We're not closed there yet. I mean, current levels are at the same approximate price as the open, but we're not there yet. It's an interesting sign because why? Well, it is a hammer, right? Those candles, and many of you guys are very good at the candlesticks, but it's also happening at support. Now, it needs to close there. I mean, higher as well. But the thing is there are so many sort of interesting conditions in the market right now that we just need to be mindful of, right? And it has been pushing volatility up quite a bit, as you're well aware of. But a quick note, let's go through ahead and just take a look at some of the markets. I'm just going to use futures here as an example. You'll notice over here that we have been seeing the NQ holding up, right? So some of the technology, which is interesting, I found this interesting. It had been leading the way to the downside, but it's been holding up a little bit in a range, and that can be seen as a positive as well, all else equal, right? We do need tech. Tech represents a big portion of the S&P 500. Does anybody know the approximate amount of, let's say, what the Mag 7 is of the S&P 500? It's a big percentage. Just an approximate number. Any thoughts on that? We need tech to kind of bounce back. A quick look, because we are on tech. I like to pull up it's called the Mag 7. It needs to prove it out that it is magnificent still, but some of these haven't been. But look at Apple. It was down early, but kind of in a sideways range. We've got also, here's Amazon down today, but a little bit of a recovery, but you can see generally speaking down. Okay. Google kind of holding near that longer term, well, support level at that point. Wrong, nailed it. Will, you're very close, but yeah, approximately 40%. Approximately. I got to put approximately because I mean things can change and it might be off a little bit, but it's like just reading through some of these reports, 40%. Mag 7 is of not the NDX, but of the S&P 500. It's a huge percent. That could really change the tide if some of these were to bounce here. So keep an eye on that. But such a huge percentage because we are dealing with a market-weighted index. Let's go ahead and take a look at it right now. Here is the S&P 500. Well, sorry, just over here. I can look at it. S&P 500. And there's the visualize. I've shown this many times, but yeah, if you start to look at all these, just add all these together, these big blocks, right? I'm trying to organize them. And down here, and here, and Amazon and Tesla over here. I don't know if I got all 7 of them, but you get a sense that could that represent 40%? Well, approximately 40% of the S&P 500, which is crazy within 7 stocks. But I just wanted to highlight that. I know we do that, we go throughout the week looking at it, but yeah, some of these could play a key role because many of them have been down. But if they start to bounce, and by the way, Meta, I know it's kind of an ugly looking chart, no doubt about it. It did have a good earnings announcement, but it did fall basically with technology. But I'm just highlighting, higher highs and higher lows. We've done this before. Something like this, if it did it again like that, like I said, these individually can play a role and collectively. And by the way, last one, Tesla. I'll just hit Tesla. Tesla really kind of looking somewhat similar to Google in the sense that you're holding this sideways range. Although you look down here, yeah, you've got a little bit more room where you could dip to kind of a lot of times these support levels represent a band of support. So keep a watch on that. But, generally speaking, and let's just clear these off for now as we kind of dove into technology there. But look at this. So here's the YM. Had really given us a lot of strength. Basically the 30 industrials and the big faller in terms of today and as of kind of late, the last couple of days, percentage-wise, have been the small cap stocks there. Now, scooting on down, we don't want to miss it. And that could put out an eyeball, right? That's a very pointy candle. Look at we went up to 90. That was a little bit surprising. I mean, that's over a 10-point move today. And there you can see it right there. I was just looking at 80 up to and through 90 right here. Folks, we're seeing this and it is in the midst. It's in the middle of really global uncertainty, right? Now, if we consider that these conditions in the market, and there can be a lot of whips in the market, and this is such a key point. If there are a lot of whips in the market and you don't really have a clear expectation or what you believe to be an edge as to what you like with the trend or whatever the case might be, some people, and I'm just looking at some of the more volatile components of the market right now, obviously oil being one of them, it might be a consideration to possibly, stay on the sidelines for a bit if you don't have that. Or let me just state this, when volatility is high, I'm going to go back and forth now between these two. So there's crude, there's the VIX. We are up at these levels where volatility is substantially higher, clearly higher. By the way, we have reversed off each one of these. And so the market could come back. We'll see what happens here. But when you do get high volatility, you can consider, if you think you have an edge in the market still, just reducing your position sizes or looking at a more shorter term time frame, more like a swing trade type time frame that could fit where you're not necessarily holding it for a period of time, you're running through earnings, things like that. So having said all that, given these conditions, we need to be mindful of certain areas that could be of interest under volatile conditions, and one of them would be oil, crude light, or just crude in general. Just looking back at the chart, there we go. Took a second to update. A big move like this. Now, it's up so high that if it could even retain some of these general levels over here, I mean, that's just incredibly high. In fact, how high is it relative? Let's go back over here. Okay, so it could still go substantially higher, believe it or not. Yeah, in 2022, wow, up to 130, 120. But that's a pretty substantial spike. And by the way, there could be resistance. This is why I like those long-term weekly charts. You guys, I would recommend, I can't recommend a lot of things, but I can say I recommend looking back and just seeing if there are prior highs, just to see if there's a resistance or a support level long term. I'm getting better on my lines, but not great. Yeah, we're very, very close to resistance right here. And by the way, in the context of this spike, and by the way, there were reports that a vessel was struck, I think, in the Straits of Hormuz. I say it's a report because I can't confirm it completely, by Iran, potentially spiking up the price of oil here. But I was also reading reports that their ability to launch missiles, et cetera, is down. It's going to be at 90% less than it was, and it's going to keep diminishing because they just don't have enough weapons, et cetera. So there might be indications of who knows exactly when it might end, but maybe less ammunition on their end. Let's put it that way. Reports to that nature. So we'll see what does happen over here. It's a big spike. I wanted to talk, though, about maybe positions in this area before we move off of it. The areas that tend to benefit the most, and I'm going to go through some of these stocks here for you as we look at this, but these happen to be what they refer to as upstream producers. They have the biggest direct upside, generally speaking, of oil prices going up. In other words, their cash flows are more linear to crude prices. Let's hit a few of those that are in the S&P 500 right now. Those companies would be stocks like ConocoPhillips, okay, and you can see kind of a general correlation. And here's the thing, percentage-wise, it hasn't moved up as much as oil, but it's moved up into a larger range over here. Now, there could be some potential, like I said, some traders might look at this and say, if they anticipate oil prices staying high, well, that could be somewhat a positive in their minds, right? They could say, well, that's great. Maybe we'll hold flat here. We might move up, whatever the case is. One of the things you want to look at is, well, is it setting up kind of like maybe sort of a price pattern of any sort? And if so, where might the support level be? Somebody might say the support level could be near prior highs. There was a gap there too. So you've got gaps, you've got prior highs over here. If you were to get a pullback, that could be interesting. The other thing too is just a breakout, if you anticipated that. The only thing is with these oil spikes, they can be quick in nature. They can go up and go down. Of course, you might be saying if they can go sideways a little bit, that just stands to benefit these guys, because when they get the crude out of the ground, they just tend to have those fatter margins, and they can realize the price of oil better within their own models. Let's hit a couple more of these. These are referred to as these upstream producers. EOG is another one. There you go. Very similar. And by the way, EOG too, just referencing back that weekly chart right there, something like this is a quick note. There are resistance levels over here. So again, if oil were to go up, sometimes if you spike up high on one of these commodities, don't be shocked if it can go back down again. But if we tend to hold and the conflict remains for a while, there can be a series of these little flag patterns in here too. The key point is oil remains high, and therefore potential cash flows could remain high as well. You can see the impact post earnings really quite strong on this. Let's hit one more over here that falls like into a group like this, and that would be something like a FANG, Diamondback Energy. Very similar as well in terms of what the price looks like. Upstream producers for sure. Now, you also get integrated majors, and I'm talking about majors that are integrated on a few different fronts. They refine it, but then they also, they produce it to a degree, and those would be the next level that benefit the most with higher oil prices. That'd be something like a CVX, Chevron, or XOM. Okay, so now XOM holding up kind of near that 150 level right there. You can see we're kind of in a sideways channel, gravitating towards 150 and holding off that range. We've got a little bit of a bump. Nothing like the price of oil, though, right? As we've jumped up through this area. And so this can be also an interesting one to kind of keep eyes on as well. There's another company out there like Shell, um, big sort of integrated companies, but these are also established companies. Again, though, you'd want to be looking at company prices to kind of hold up, hold up better, oil prices to participate in some of these, because if it doesn't hold up, you might see a counter reaction come down. And that's just the big question you have to look at. Again, that comes back to maybe trading some smaller sizes as well with just that elevated VIX level that also, by the way, could come down. Now, as we go and move into our sectors and then maybe looking at some example trades here, we will. But if we bounce off this level again, do you guys know what happened here? I think we did this last time, but just for the heck of it, just show it again, because there is that inverse correlation on a comparative study with the S&P 500. Real quick, I'll do it. You can see that when we did dip, correspondingly, the S&P 500 shot up to a new time. That was an all-time high. When we dipped again off that same VIX level, also known as resistance, right? That's what it is. Still resistance. What did we do again? We hit another all-time high up here as prices went down. And of course, when you dip, we're at these lower levels. We dip and we're still interesting. We're holding into this range, but if we get another one of these, we might begin to test resistance here and possibly break above. So we can watch for signs on the VIX. What were those signs? You know what they generally are? Volatility tends to break to the upside, but it also crashes to the downside. I mean, you can just see it. Just look at the sizes. Just look at the structure. It gives it away. Those are inverted, just V's, right? V-shaped moves. In fact, if I put a minus in front of this VIX over here, minus VIX, it's going to flip everything upside down, and you're just going to see these V bottoms. I'm used to seeing things from the bottom coming up. But anyways, there you go. And there you go again. So where it goes up fast, it can also go down fast. I'll take the minus sign off right there. And the point is if you start to see a big red candle, it might be followed by more red candles and more red candles as the S&P and markets go back into risk on mode, and maybe traders jump out ahead of this. Okay, and try to trade some of these. All right. Well, that's a look at oil. Hopefully that gives you guys a sense of what is correlated the most. Upstream producers, integrated majors like next would be integrated majors like Exxon and Chevron generally, is how that works in terms of direct sort of like our most linear cash flows there compared to high oil prices. All right, let's move on. Now, I did send this out yesterday. I thought it was interesting because I sent it out as an X post, but just looking at what had, one of the strongest weeks out there would have been technology. Again, we said if the Mag 7 can kick in gear, that can be an additional force if the VIX comes down. That would be two key drivers to keep an eye on. But energy, the last few days has been strong as well. Materials, down. Okay, clearly down. I'm talking lower lows, lower highs on a relative basis, because that's what we're using here, a relative study to the S&P 500 index. How is it doing relative to the S&P? That's what we're looking at here. All right, some that could be interesting too, if we start to kind of see this continue, just, maybe prices just kind of hold in this range. Healthcare, defensive in nature. What is it doing again? It might be breaking out. Staples could be breaking out as well. In fact, now let's just look at the charts themselves over here. Into the charts. Full 6-month just actual chart grid of these right here. Okay. And so, it's so interesting to look at this. I've got to line these up a little bit better. They're not quite the same. Yeah. Lined up. But anyways, you can see over here, healthcare possibly coming to the lower end of the channel. Consumer staples Could it be flagging here? These are defensive, still waiting to see what happens. And technology. If technology starts to break above highs, as we're just looking at S&P 500 stocks, some areas to keep a watch on. Of course, yeah, obviously the strongest one just overall would be energy, in line basically with the S&P 500, with crude futures going up. I want to do this right now because we have been seeing some strength coming out. Just that spike that we saw in the staples. I want to go into a few of those right now and just highlight this too, because if I come over here and let's look at some of the companies this week that have announced, well, not just necessarily this week. I mean, Costco was one that did announce today. Costco beat expectations just slightly, but it did come back down and bounce kind of sharply here. It's a big candle to the upside. Thinking of kind of like sort of like retail staples, we've got Costco here, where you might see maybe what's the beta on Costco? I'm curious. I haven't checked it. Oh, it's real close to the market. So about 0.99. So in terms of its volatility relative to the market. Another one too showing strength that kind of falls into the same category, Kroger. Kroger had a good announcement too. So kind of falling into that same category. Think about areas that would be sort of insulated from, let's say, war type conditions. Think about the American consumer and how it might work in terms of just like food or just household type products. Kroger, well, kind of breaking above. We'll see where it closes at. Very close. You could say that some of these levels it crossed above, but I don't know if it's like right there. We're actually still at resistance. But watching these companies to kind of break out and kind of come back and see if they do hold that, it could change the trend, could change the dynamic. What else do we have over here? Ross Stores. You could see sort of another theme, kind of insulated from, you'd say, like wars and things. Maybe not, maybe not fully as necessary as like food products, but maybe gets more interest because they are discounted to a degree. TJX, another category too, that's been doing actually pretty well. Let's see, I think they beat earnings. Yeah, they did. And they broke above highs as well. So setting up scenarios here for the possibility of a trade could be interesting in any of these categories. Now, I want to do this over here and take a look at some of the companies. So here was one that I put in earlier this week as an example trade. Now, I did on this, it was a different type of a trade that we did, but you'll notice that to Target, which did get a new CEO right over here, February 1st in this range of, I think it was somewhere over here. Get a new CEO. They beat earnings expectations, trying to change the corner on what I guess they had been doing before. I don't know all the details to that, but you could see that it's begun to spike up. And it's a pretty strong trend. Now, what I'm going to do on this is, on a good earnings announcement, so a post-earnings move over here on Target. We'll go ahead. Let's just put a sample trade in here with a couple of targets. The target I'm going to put in, though, is just going to be a simple, in this case, keeping the trades short term and just looking for a bounce somewhere in the lines of approximately 130 on an example, sort of swing trade up here using a small mini flag pattern. A good breakout, a test of support, also a couple of candles in here. Do you guys know what this candle is called when you get two of these in a row? Now, I don't know if it's going to, I always say this, and there's still time left in the trading day. It's got to hold in here generally in the next 35 minutes. But I'm curious if anybody knows this one. It's not too common. But when you see this and this together at support, post a breakout that's earnings, well, it could be of interest to some traders. While I'm waiting for that in the chat, let's keep busy here. And I'm going to go ahead and just right-click on the ask price. I'm going to go down to Buy Custom with an OCO bracket order. Where I know that the upside would be, I think I said about 130-ish. Oh, hit the numbers lock. There we go. 131 in that range. They are twins, Kevin. Yes, they are. They're very close. Hey, In 35 minutes, we'll know if they're twins. I got to put it that way because the day's not done yet. Spinning top, says Duke. Yeah. There's another one. There's another word. You guys are, there we go. Greg, tweezer. I was thinking tweezer. There could be some other descriptions there, but hammer time. Double hammer time. Hammer time times two. Yeah, you're right. You're getting the concept. Okay, I got to move back now. But tweezer, someone would say tweezer tops. The funny thing is, I'm calling it a tweezer bottom, and the tweezers are kind of like this. You get a couple of hammers here, but they have virtually the same low. I'll fill these guys in. That'll look good too, right? They got to have virtually the same lows. What does that mean? Let me tell you what it means. On an intraday basis, let me just say it. Double bottoms. And who doesn't like a double bottom? Now, we don't know. It's got to confirm and go to the upside. But that's what it's showing on a short-term basis. A low and a low. Does a low and a low make possibly, could it be of interest to somebody there based on trend, breakout, holding support? Yeah, maybe it does. Maybe it does. It's just something that traders might consider with that kind of strength. Tweezer bottom. But you got the tweezer. You guys got a lot of, hammers. Yes, sir. Chopsticks. Yeah, you need two, right? That's correct. Since I said it, I'm just going to show it to you right there. Maybe we have to go over here to actually see it. Yeah, there's your two bottoms right there. Bottom one and bottom two, but you get the point that it's close. And the thing here is now that we're watching this on a 5-minute, because I've got my little chart set up that way, well, some traders might just say, Mike, it's so close. I might just wait for it to break this resistance. Perhaps you could. This is a shorter term chart, but it's just something that somebody could tap into if they wanted to. But back to our tweezers here, our chopsticks, hammers, they're all valid. All right, so let's do this. Let me go over here. I'm going to complete this. I got about halfway through. Let's go to good tail cancel, good tail cancel. Now I'm going to show you over here. We're going to definitely cut this in half because we say market conditions are volatile. Now I've chained this up. I've linked this. So we're all in line 50-50. Okay. I've got to put in my stop. It's going to be down below this level. I think it was still a couple points away. I'm going to go 118. And we'll see what this looks like. We can adjust it quickly though, but just to put it in on a 50. Now we could also say, depending upon account size in your paper money account or whatever, there's nothing to say we couldn't do a 25. All I'm saying is I'm just trying to get the point across. With volatility high, we're creating shorter term time frames. Folks, this by definition is a shorter term hammer, maybe positioned in one of those areas that we already saw had some strength, and that is some of these retail ends. At least the Target by my place, they have most of the store, the vast majority of it is like a grocery store type thing. It's like a Kroger, you could say. But anyways, here you go. Here's that trade. You can take a look at all the different components there, but always confirm what you've got. Let's send it through right now. And it actually still works. What am I doing in tools? All right, so let's go to charts. Now you can see, now what I'm going to do is I'm going to put this just below this low right there. I'm going to keep it a little bit tight. I'm just going to try to, for a potential stop order. Now remember, because we are placing trades in here, and I'm just going to read this off here because it's important to note because we did put a stop order in, and we just want to make sure on this that stop orders aren't guaranteed to be filled at or near the stop price. Okay, they do compete with existing market. They do compete with other market orders out there once they get triggered. A market order here, but it's just a 50 contract here. Now, somebody that's saying, you know what, I still like the area. Maybe they say, well, I'm going to wait for a breakout here. Now, technically, folks, if I had time to sit here and wait with you for a few hours, we could wait for this to break. But I just wanted to put the example trade on while we're in class. There's a short window to do that, and I realize we are buying right at resistance. But hey, maybe the tweezers will hold up. All right, so there you go. All right, next up, let's continue to go here and let's look at some other areas that we could dive into. Now, back on the technology that had been holding up, another theme, another core theme, because we did look at the NDX. NDX has been kind of a sideways range, right? It's been holding up a bit through here. And with this, perhaps it's really been in a tight range though. But we could maybe get back up above that 25,000. Looks like a big key number in there, but you kind of have to extend higher. And right now we actually are trading towards the bottom end of the day. There's the range right there. We see that in the bar, but tapping into this, it's not a Mag 7, but here's another company that came out with earnings today, and that would have been, I'm sorry, not today. They just came out this week. They beat earnings by, I'll give you the number, 22.53%. I did look at it. You can see the beat number where it beat right there. Estimated was 1.67, 205 the number. But point is, folks, it's post earnings now. Earnings are out of the way. And guess what? We did move up on the news. And it was technically, a couple days ago, but it was after market, right? And so you saw the move come in. Yeah, after market, it gapped up yesterday. There it is. Now, this one has been holding up within a range here. We've kind of pulled back down. But what can happen is after you come, just like earnings can be a positive indicator. I'm just going back here. We can look at it. This can happen too in a move. You get earnings that did come down. I think you beat earnings here anyways, but ultimately you still ran up. This one did gap up. There could be some consolidation. Traders could look at this as well for the possibility of a trade to the upside. The other thing I would say with this too, and you guys know I look at this, what the heck is the volume doing? Well, according to the money flow, which does try to look for accumulation and distribution, prices did what? It went down. They went down, and money flow went up. That's what you refer to as a positive divergence with buyers. That's a D. Could never tell. Positive divergence, but right there. And so we could have seen buyers coming in here, and that could be of interest to some traders here. Now, again, these might not be like ideal times because maybe somebody says, you know what, my gosh, just wait for this. Wait for this high to come in, and we could certainly do that. We could wait for a 350 here. Okay, so let's do this. This is going to count as kind of like an example trade setting up in the future is what we'll call this one, because that would be an area that somebody could look at. In fact, normally when there's a range like this, similar low, similar high range, traders are not necessarily buying right at resistance. They might instead say, I'm not giving up too much just to let prices show that they are going to break through or show that they're going to bounce down here. Okay, so picking up on this theme in the market of technology being stronger and really looking at one of the strongest companies out there, we can keep our eyes on this. So what I'm going to do, I'm going to elect to do this instead. Instead of just putting in like an open order, let's just put an alert in here. Right near, and this is going to be just below that 150 to kind of clue us in a little bit. I'm going to say approaching or near $150. So that when I go down here under my notify on my mobile, I can go ahead and just make sure that this is checked at the bottom, folks. Yeah. So I get that notification. And there you go. Now, a quick note on that alerts aren't guaranteed to be delivered at the same time that order is triggered off, okay? Now, have I had an issue with that? No, the alerts have been good for me, but we just want to say, it's not guaranteed to be filled at that time frame. But there you go. We put the alert on right there at that level, and so we can tune into this for potential paper trade if we want to do that as well. Another company that falls into this that I did look at yesterday in my ThinkScript class was Dell. And Dell had what we refer to as a double divergence occurring with, we just talked about divergence, but it had a long divergence over here with the RSI. It also had one too, with the MACD. But notice this is similar too. What's the theme here? Technology showing a little bit of strength, right? As we see these kind of positioning themselves for the possibility of well, this one broke out and kind of tested, but will it continue? Well, that remains to be seen if we get something like that unfolding. So it's hard to say, but it did gap on earnings, so post earnings run. It's holding near support, and you guys can kind of keep tabs on that. All right, folks, if you're getting value out of this discussion, smash that like button. It lets me know, if you are getting value. It lets me know that you are getting value, and appreciate that if that's the case. And also encourage you guys to follow us on the Trader Talks channel. We do have a number of playlists under here. You can also find specific companies over here too if you wanted to. This is the company. This is the trade I did yesterday. It's just here we go. Divergence. There it is. Just we talked about this in that trading system. You can take a look at this if you want to. This is specific because we were actually able to find companies that are showing strength in tricky conditions. If it's of interest to you, it is there, but we've got a lot of great posts from our coaches in here. There's some from Cam in here. Cam's got a lot of great material as well, but I encourage you to take a look at this if you guys are in fact interested or would like to take a look at some of those. By the way, since I mentioned it, yeah, I think scripts aren't guaranteed for timeliness or accuracy, but there you go. Okay, now getting back to what I wanted to highlight over here as we dive on in back into this. The other thing that we looked at over here that was showing strength, as we can look for potential scenarios in here for where stocks and everything's could be potentially maybe showing some signs of a bottom. And this was an area over here. So we looked over here at healthcare, but in addition, you know what else has been really strong? I mean, utilities. Utilities, the demand for energy has really been quite high over here, right? As you can see right there, utilities. And a couple of companies I wanted to just highlight here in that group that could present some interest to traders that might be focused in on that recent strength. But you've got companies like CEG over here. This is Constellation Energy. And you can see something a little bit similar. It's kind of in this bull flat type formation right here. We did make a higher high and a higher low. We did break through an interesting level of resistance over here. And what are we doing? We're just kind of holding flat right now. Okay, it is post earnings, correct. And post earnings, we're trying to minimize, with each of these trades, just kind of like trying to think about those companies that might be less impacted by already this global conflict that's going on, right? Minimizing that and seeing where strength is at, using markets and sectors to kind of help us along the way. So for a third trade, and we're going to be able to put one on here, but it's an expensive stock as well. In this class, we just mainly have done, just stock trades. So I wanted to highlight that for you. But it is going sideways. And when you get these sort of flat patterns, it's kind of interesting because it can present for us sort of ranges where we can maybe, get in or consider exiting the trade as well. Okay. So let's do this. It's $318. We're really going to narrow this down because we said, trading smaller could make the most sense. So let's just get one in here right now under our belt. And I'll highlight this for you, where that trade could go, So here we are in here. I'm going to, first things first, GTC. Let's set this one up high. And then I'm actually going to drag that target and those other levels to where we want it to be. So I'm just going to go 330 for now. And over here, we're going to do something like 315. 315. The big change over here, too, is going to be right in this area. We're going to go to 20 shares. Okay, let's click that again. There we go. What does this look like when we hit confirm and send? We brought that buying power down quite a bit, the buying power effect, because we're only using 20 shares over here. But let's look at it. I'm going to go ahead and just set that trade up right now, put it in place, and I'm way far away over here. So let's move this guy up. I'll show you perhaps where a shorter term flag pattern could be. I'm basically where I want the stop to be. Oh, send. There we go. Still waiting for a fill as I'm adjusting these, but there we go. I've kind of narrowed this down. I put this potential exit area a little bit lower here, but clearly below the range we're at right now. Now, we said short term is another way to limit our risk during these conditions. Here you go. Watch this. Target like a flag pattern. Target up. Did I get close to it? It's about 360-ish. I'll put it just slightly below 360, but there's our target. And you can see where risk and reward would line up right there. All right. Just waiting for that fill to go in on that right now. But that's a play on utilities that has had a lot of demand for energy due to AI. And a lot of these technology companies are actually building that up right now. So with that, folks, we hit 3 example trades today in 3 sectors that might have shown indications for potential less, I could say less volatility under these conditions. We're seeing strength on the chart, seeing strength in the sector, even on the market for some of those technology companies. But wanted to go through those with you all today as we line this up. And thank you, Kim, for your help in the chat. It's been a great being here with you guys today, but that is what I had in store for us. So again, keep a watch. Key things just to note, again, global uncertainty. With that in mind, there could be a lot of whips in the market. And with those whips in the market, we just have to make sure controlling the position size and maybe the time. Today, we used a couple of trades plus one that's potentially setting up for maybe some short-term flag patterns that are in line with potential market and sector strength, at least of what we've seen thus far. So with that all, hey, wanted to wish you all a fantastic weekend coming up. We're just about there. Last webcast of the week. On that note, everybody have a great rest of the day. See you next time.